I'm Cramer. Welcome to Mad Money. Welcome to Cramer America. Other people make friends. I'm just trying to make a little money. My job is not just to entertain you, but to educate, to teach you. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. Okay, we need to have a day where it doesn't feel like we're having an emergency tracheotomy with a ballpoint pen. I mean, today was still one more session where we saw that big pen coming right at us. A day where the president was just crushing the market with some postings that were extremely hostile to China. I mean, at one point, the S&P was down 1.2%. Then the president had a goodbye press conference for Elon Musk, where he said he'll speak to President Xi soon. And the next thing you know, we erased the vast bulk of those losses, with the Dow finishing up 54 points, S&P dipping 0.01%, and the Nasdaq declined 0.32%. The S&P 500 ended with its best May since 1990. An incredible statistic, made even more amazing, given that the president in the Elon send-off actually ran some positive coverage of the economy by CNBC's own Squawk Box. Miracles all over the place, and no emergency tracheotomy in sight. Yet it still seems like a monumental time. Sometimes you have to just take a breath and ask why things seem so momentous. Notice I said seem, because there's nothing on next week's game plan that should have us all that worried. Yet here I am at this wall, and I feel like I'm staring down the barrel of a gun, the gun being Friday's non-farm payroll report. That's because we have a hole developing. We have heard from retailer after retailer in the last few weeks, and we can tell that the lid is about to be blown off of pricing. There's no doubt prices are headed higher for the month of June in all sorts of goods. So let's think about what can happen here. If we get a strong employment number Friday, then there's no way the Fed's cutting short-term rates, and longer-term rates are going to go higher, too. If we get a weak employment number, then the Fed still probably won't cut rates because they know that tariffs are inflationary. You know, Jamie Dimon said stuff like this today, the CEO of J.P. Morgan, to which I say, what was the president thinking when he decided to raise tariffs on the entire world all at once? Did he believe that energy would come down so much it would make everything just fine and dandy? Does he know something about, say, that OPEC Plus meeting this weekend that could send oil plummeting to $50 from the 60s? I hope so. Did he think that retailers would just say, you know what, our lot in life is to make less money now that we have a new president? I put it like that because I can't recall a time when I actually knew for certain that inflation would go higher. That's right. No. When you read enough conference calls, you begin to realize that rates cannot and will not go down on the short end or the long end, not while prices are rising in every aspect of your life. The Fed doesn't cut rates when inflation is rampant. Your only hope is that retailers will eat the cost of tariffs. But why would they do that? Retail is not a high-margin business. They can't afford to eat the cost. My hope is on Monday, when Jay Powell speaks, that he explains it somehow better than I did, and we don't feel like we're staring into the barrel of a gun. Now, we've begun to question the strength of all sorts of our institutions around here these days, and we know that the president's assault on Powell could be horrendous if we get weaker employment on Friday. But we also know higher prices are coming. The retailers have pretty much all said that, higher, with the exception, by the way, of Costco. Nice quarter there. And it's the Fed's job to maintain price stability. You don't maintain price stability by cutting rates. Oh, and it's not like the president's saying that he wants low tariffs after making a bunch of trade deals. I think he wants even higher tariffs because he wants to punish. He wants to punish China. He wants an embargo, I think. So the price increases we're hearing about could be the first of many. The creep is everywhere. You know, look, we're going to get earnings from Campbell's Monday morning. And there was a time when I would tell you, listen, if I get the stock at 11 times earnings with a 4.5% yield, I got to buy. Now, though, I want no part of it, given the gross margin squeeze from the rising cost on everything in the can and the can itself. Oh, let's not forget the rise of GLP-1s, weight loss drugs, which make you feel too full. They make it feel so you can't have a lot of goldfish. Goldfish! What did they do? Tuesday, the kind of day that explains the pain of this moment. We hear from Dollar General in the morning, and Dollar General's done a remarkable job at keeping a lid on prices. But how much longer can they do that? We got to listen. Same as Wednesday, we hear from Dollar Tree and Five Below. Hey, man, these are so-called last resort retailers where you go when you have having trouble stretching your budget. They're masters at finding low-priced merchandise. But with the tariffs on China, previously low-cost merchandise, they got to scramble to find the equivalent from countries that at this point might have more leverage than you'd expect. I mean, they never expected all these orders. I think all three chains will have good quarters because they were able to bring in a lot of merchandise before the tariffs hit. It's the guidance I'm worried about, because the tariff regime means that either they need to raise prices substantially or accept a much lower level of profitability. Their stocks could be terrible. I wish they could be as adept as Costco, which reported this outstanding number. But then Costco focuses on a relatively small number of items that it buys in extreme bulk, and it can always swap this stuff out if its suppliers get too greedy. Nobody else has that capability. My hope is that the dollar stores can raise prices once and then keep them there until they find cheaper sources. That might be tough, though, when the White House seems to want everything made here, and anything made here will be more expensive than made there. On Tuesday night, to back up, we hear from CrowdStrike, and we know there'll be plenty of nervousness here because we've had 3 cybersecurity plays in a row with poorly received quarters: Palo Alto Networks, Okta, and SentinelOne. Meanwhile, there's only one winner, Zscaler, which is on tonight. But what a winner that is. CrowdStrike struck out in the last quarter. And we told Investing Club members that it was a buying opportunity. Now the stock's trading above where it was when that last quarter's reported. I fear that it will be difficult to meet expectations. I'm sticking with it, though. Why? Because we're about to annualize the big glitch. Remember that one, the CrowdStrike's Clara shut down an awful lot of terminals around worldwide? Well, before, and then it made a stunning recovery. If it could survive that massive outage, you know what I say? Just own CrowdStrike. Don't trade it. What can I say? Thursday morning, we get a tale of woe and a tale of success. The woe of Brown-Forman, maker Jack Daniels, and Cracker Barrel is the positive. The restaurant turnaround along with historically low prices. Now, I don't think liquor's bottom. Beer was really bad last month. Too much GOP-1s, too many younger people worried about their health and how they look, and prices that just won't come down. So count me out of Brown-Forman. As for Cracker Barrel, so many restaurant chains that offer value have seen their stocks pop, and we've seen Darden pop, Texas Roadhouse pop. I mean, these things are... Did you see Brinker today? It looked fantastic. This one also has value, and the CEO understands that we need to reinvigorate the company's stores. Works for me. I want to do a show from the store. After the close, we get results from Broadcom, the trillion-dollar tech company that no one seems to have ever heard of. I think it's having a bang-up quarter. We're telling club members that it could be reporting an excellent quarter because its software is getting great margins. That could help us. Lululemon, there you go, ton of business in China. And as a matter of fact, it's actually been a real bright spot. We did a piece earlier in the week that said that this could be a bottom for the stock, and I think it's just too cheap. I'm sticking by that judgment. Then Friday, of course, is where we need a Goldilocks labor report. I got to tell you, there is one scenario where it won't hurt us, okay? No job growth and no wage growth. Can you believe it? That's what I'm rooting for. This crazy thing about this whole week is that if we actually get that number, this market could rally so hard that it can make up for any previous losses, and we could have a continuation of the great month of May. No job growth and no jobs. That's something to root for, ain't it? Because the bottom line is this ain't baseball. It's your money. Stay long, but no fence swinging, please. It's too momentous for that. I need to speak to Ann in Indiana. Ann.
Hey, Jim. Thanks for taking my call. I'm a club member.
Yes.
But I'm calling about Fair Isaac.
Look, I've got to tell you, Ann, I think Fair Isaac's gotten an unfair joust from the government. Fair Isaac, you know what? Let's get Will Lansing on the show. He can tell the story better than I can, and he is one dynamite guy. We are going to get him on. I'm going to make it my life's work. Well, I have other things to do, too, though. Let's go to Lewis in Massachusetts, please. Lewis.
A big Friday, end of May. Nixon 7, booyah to ya.
Oh, my. Oh, wow. This is fired up fella. Fired up fella. How can I help you?
Long time.
All right.
First time, long time. Member of all your clubs, and thank you for your tireless work you do for us day in and day out. Your mentor to me and so many.
Thank you, man. I aspire to be the hardest working man in show business, and some people have been saying lately I've been making it. How can I help?
You're the best. I'm calling about Uber. It seems to me that with pending tariffs in whatever capricious and arbitrary form they'll come in, that new and used prices for cars will begin to shoot through the roof. With this, I believe more and more people will simply shift to rideshare to travel and do things like loading up at Costco. However, on the flip side, there's an argument that robots are going to make them obsolete over time. What's the deal? Can it break through $100? Give me your...
All right, here's my deal. Lewis, I've got to tell you, David Faber talked about this today. You know, David Faber killed Tesla. He killed it when he was interviewing Elon Musk, and there was this thing underneath. This picture said Tesla's not going to buy Uber. I say you buy Uber. I think Uber is the right level. It's down huge since that interview. Bye, bye, bye. Hey, why don't we go to David in Tennessee?
Hello.
David.
Thank you for taking my call.
All right, what's happening?
I wanted to get your opinion on Pfizer. It appears that they have 6 drugs that are in the pipeline to be released or in phase 3. and they just bought the rights to another drug from a Chinese company that appears very promising. They appear to be trading at a pretty low price.
Oh, they are. You know something, David? I'm with you. 7% yield. It's got to be something big coming out of that CGen acquisition real soon about some hard-to-beat cancers. I am with Albert Bourla, and I am with you. I think we can own the stock of Pfizer. All right, look, the biggest thing matters next week is the Friday job report. I think it's a kind of a wait-and-see market until then. It's got to be no job growth and no wage growth. On Monday, Mad Money. Monday. Yeah, wow, that's what I got. I don't like the weekends. I like to be here. I like to if we could just have Friday, Moon to Monday. But everybody tells me you have to have a couple days off. Anyway, Agilent, letter A for you home gamers, reported top and bottom line beat earlier this week with growth in China, of all places. I'm seeing what led to the strength with CEO. Then we're wrapping up our series on beating down retailers to see if Abercrombie and Fitch and American Eagle are worth trying on for size. And earnings season has not been all that kind of cybersecurity cohort unless you with Zscaler. I'm seeing what helped send that stock up nearly 10% today. We're going to talk to the company's top brass. So I want you to stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.